The United States has seen 4 decades of inflation. The hardest affected families by the crisis are those with higher incomes. Due to the sky-high levels of inflation in Venezuela, where prices double every few weeks. In May, inflation reached 8.6, the highest level in 40 years. Venezuelan currency is now worth almost nothing. To combat this crisis and pay the strikers in the government simply printed more money. Millions of whatever figure was printed on the notes ready meant nothing. The German mark was worthless. If the same amount of goods were produced in the economy, but there was twice as much money, then we would think that the German mark was worthless. We all know that printing money is very, very unhealthy for an economy. And every time a country has tried to print money, it has led to disastrous consequences. For instance, in the 1920s, the Weimar government printed over 500 billion paper marks. And in just 3 years, Germany's inflation rate got so bad that the influx of cash into the financial system simply flooded the system with money. Yes, we did. Of America printed $3 trillion in just 3.5 months, but strangely, while other countries that printed money experienced hyperinflation. In the case of the US, inflation barely reached 9%. This had the opposite effect, where instead of inflation increasing just in the US, inflation got exported to other countries all over the world. Meaning that despite America printing $3 trillion, inflation increased. And this is because of the United States' covert superpower dollar. In this episode, let's try to understand how the US economy is immune to money printing, how US money printing caused inflation in India and other countries, and most importantly, what are the study materials to help you understand this insane economics of world trade better. Once again, this may sound quite technical, but as usual, let's attempt to comprehend this using a simple tale. You see guys, just like we did, you need to understand quantitative easing to understand the money printing prowess of the US, which is then lent to people like you and me. Similarly to how in the US the Federal Reserve lends money to the Bank of America, which then lends money to people like you and me. For example, suppose the Federal Reserve charges Bank of America an interest rate of 6.15. If Bank of America accepts this rate, what will it do? It will lend the money to Mr. Jackson at an interest rate of 8.15. Earning a 2% profit. Therefore, suppose Bank of America gave Mr. Jackson a loan of $300. We'll have to raise the home loan interest from 8.15 to 8.25 to turn a profit. And if you consider the impact of this change in the interest rate on loans, it's very, very significant. For instance, assume Mr. Jackson took out a home loan for $300,000 with a 20-year term. Assuming he earns $8,000 per month. What will happen if the interest rate increases from 7.25 in April 2022 to 9.25? Let's say Mr. Jackson's effective savings at the end of all expenses is about $1,500. However, now that interest rates have increased and Mr. Jackson will have to pay $422 more in his emails. Mr. Jackson will only have $1,078 to spend, leaving him with a total of $1,078. This is an increase in the emails of 18%. In January 2023, the EMI would rise from $2,326 to roughly $2,000. When home loan interest rates rise nationwide, millions of Americans will buy fewer cars, spend less on clothing, and take fewer vacations. As a result, demand for goods will decline, and businesses will eventually have to lower their prices to remain competitive. The Jackson family will cut back on car purchases, outings and all luxury purchases this month to cover this additional expense, so that more people could purchase the vehicle. But at the same time, Volkswagen's issue is that even its cost of production has increased due to shortages of semiconductors, higher gas prices as a result of the Russia-Ukraine war, and soaring shipping costs. As a result, they are unable to sell the vehicle for less than $165,000. This is how the US economy got stuck in a rut. Over $165,000 because the cost of production has increased. A market where buyers can't buy and sellers can't sell is essentially an economic nightmare because there isn't any money flowing into the market. The question is, what can the Federal Reserve do to fix this problem? Well, we have something called quantitative easing, which is a method whereby the US Federal Reserve lowers the interest rate on government bonds. In the same way that Bank of America increased the interest rate from 7 to 9.25. For people like Mr. Jackson, they would now decrease the interest rate for Mr. Jackson from 9.25 to just 4% because they are still able to make a 2% profit and have plenty of money to lend. Now let's return to our story and see the impact of this money printing in the US and the global economy. As you can see, after the banks lowered the interest rate on Mr. Jackson's home loan, EMI would default on it. This is because after COVID happened and the economy was at a standstill, They printed money and the interest rates fell to as low as 0.05%. As a result, even the banks lowered the interest rates. The demand for the Volkswagen car has increased to the point where even if VW sells the car at $205,000, people are still willing to buy it. Which is why VW would further increase the price to $22,000 to take advantage of this opportunity. Just like Mr. Jackson, when millions of people see their savings increase by a significant amount in their purchase power increases, and they can easily apply for a car loan to buy a car. So why are we blaming the US for increasing inflation? In other countries, when the Federal Reserve prints money, has increased the inflation in the US? Well, guess what? This is where the dark truth of the US printing dollars and the side effects of quantitative easing come in. So once more, let's talk about that. Of people see their purchasing power increase. It increases the demand for products. Eventually, it increases the cost of goods in the US. As we saw in our example. As customers like Mr. Jackson saw their house loan EMI decline, they subsequently began to purchase an increasing number of vehicles. VW, a German firm, may raise the price of the automobile from $200,000 to $220,000, while simultaneously selling it for €200,000 in Germany. For this computation, we will treat €1 as equal to $1. Returning to our example, VW may sell the identical vehicle in the US for $22,000 and in Germany for just €200,000, which is equivalent to $210,000. As you can see, they are competing on price. VW will begin shipping more and more cars to us to meet the rising demand in the US, because it makes better profit margins with American customers than it does with German customers. Keep in mind, however, that this story is predicated on the assumption that the import duty on cars for us is very low, or that there is a free trade agreement between these two countries and the product we're talking about here. VW is indirectly telling the Germans that if they can buy the car at €220,000, that's great, but if not, VW can still ship it to the US. This is the first way that the United States printing money increases the demand for imported goods, which increases the price of imported goods, which ultimately increases the price of the same goods in their domestic markets. And when this happens, the same goods become more expensive. As to how the United States creating money causes currency depreciation, which in turn leads to inflation. When the United States produced money in 2020, concerns about a potential inflation spike have returned due to the inflow of cash into the banking system. In the year 2020, the United States printed 35% of all the money it had ever produced. The rate at which central banks throughout the world have pumped money into the economy is a record, and the scale of the billions of dollars in economic stimulus that have an impact on the likelihood of inflation, making it an incredibly historic time. Move quickly to combat a worldwide recession. The main worry is that not only will there be these significant increases in inflation this year, but also that people will begin to anticipate even larger increases in the future. As usual, let's try to understand this by using the Volkswagen example. Even though Volkswagen wants to sell its car in the US for $220,000, this is how the transaction will be handled. There will be a VW German branch and a Deutsche Bank that will be dealing with the German branch of VW then. Similar to VW and even BMW, ladies and gentlemen, a Mercedes representative and a BMW representative are all interested in purchasing euros. As a result, the demand for euros will rise, and Deutsche Bank will capitalize on this by raising the price of euros. For example, if €1 was selling for $1, Deutsche Bank will sell the currency for $2. But guess what? BMW will also be willing to pay $1.03 to buy €1, because even they are getting a 10 extra margin. So again, Deutsche Bank would increase the price of euro to $1.05. Similarly, when various American branches try to buy euro from German banks, the price of euro will rise. This is because when German banks sell their currency to American branches, the price of the euro will rise. Quantitative easing increased Americans' purchasing power, which raised the cost of American-made goods and resulted in more jobs being created. When I say this, most people will say, "Yeah bro, that's great, the value of the euro is increasing against the dollar. What exactly is the problem?" Well, it turns out that there is a very big problem with other European exporters. For instance, if a European clothing company called Forever 19 is exporting to the United States, there is a very big problem with them. However, unlike Volkswagen, which is a branded company Forever, against other American companies that are selling the same quantity, before quantitative easing, the euro was equal to $1. but now that it has appreciated to $1.05. Even though their cost in euros is still the same. Their product will cost $10,500 in the US. The moral of the story is that the US can continue printing money to a great extent and still avoid succumbing to hyperinflation, as long as the US dollar remains the reserve currency. Why is the US dollar the reserve currency? Well, you can find out in one of our previous episodes, which I'll attach in the description. This is the story of the US printing money and having inflation in other countries. You may look at the study resources to further comprehend this topic, since it is now extremely apparent to you. People, I have an important announcement to make. We are revamping our ecom study to go all in on dropshipping and to give you some life-changing business opportunity. If you want to get business nuggets on dropshipping, please click the link below. That's all I have to say to you today, guys. If you learned something, please make sure to hit the like button to make YouTube happy. For more insightful business videos, click here. Till the next one. See you in the next you.